a lot to talk about this segment about the fear of investing and how a lot of people hold out.
Yeah, this is real, and we just see it time and time again. And thought it would be a good topic of conversation because it's not going away anytime soon. But the more you're making choices about your money and about your finances based on kind of that fear, the more you really could be doing some long-term permanent damage to your investment results.
Right. I mean, so we were looking at an article earlier, some data from the World Economic Forum. 40% of those surveyed did not invest in the stock market due to a fear of losing money. And the fear is certainly real. The market can be volatile, but of course the actual cost of not investing over time is much more significant than anything that fear can cost.
Well, and back to what we were talking about at the beginning of the program, where you were sharing, it seems like a lot of folks your age, which is odd that Gen Z, millennials would be steering in this direction, but it seems like overwhelmingly there's that push to, hey, I'm not going to invest in the market, despite all of the information out there. It's crazy how much information is out there on it. But yet you've got a couple of different generations that are really just saying, I'm going to go ahead and just kind of stick the money in a savings account, money market, or as one of your buddies is doing, just straight in a checking account.
Yeah, I mean, call it what, is it a lack of education? Probably that's certainly a part of it. I mean, for the last few years, money market rates and CD rates have certainly been attractive, so I think it's made that decision to invest in the market maybe a little bit more difficult. But we expect those to fall. They already have started falling, and they will likely continue to fall with the possible rate cuts in September.
Yeah, I mean, it's interesting. Speaking of kind of all the available options out there, social media. One of the top comments, even on like financial influencer, TikTok or YouTube, it basically kind of echoes one sentiment, which is that I want to invest, but I'm scared. Of course, if you spend a lot of time on social media and whatnot, you're probably scared anyway, because again, fear sells more than
right.
Positive stories. It can be a major impediment in terms of how big of an impact that fear can put on how you do well, how you do in terms of your investments and your finances over time.
Right, and I mean, there's a lot that can be done to help alleviate these fears. One of which is just your choice of investments. You don't need to be buying options or buying things on leverage or emerging market companies. Something like a mutual fund. You're investing in hundreds of companies. The success or failure of one singular company does not decide your returns at the end of the day. So it's really investment choice and of course education at the end of the day, which is what we're here for.
Well, and Chet, mutual fund, obviously created nearly 100 years ago to give the average investor, the regular investor, the opportunity to be able to invest and have a diversified portfolio without having to make a significant investment. When you buy a share of a mutual fund, mutual fund shares can be, $10, $20 a share. And at the end of the day, there's usually 200-300 companies in there. And that gives you pretty good diversification where, this notion of, I'm going to lose all of my money. Right. The mutual fund really makes that very difficult to do, because if you're going to lose all your money in a mutual fund, you're going to need 200 or 300 of what are arguably the largest companies in the country to all go out of business and all go out of business at the same time.
Right, incredibly unlikely, and at that point, what is your mutual fund worth? It's probably canned food time.
Yeah. I mean, if you got 300 of the largest companies in America going out of business at the same time, you most likely have much that you need to be worrying about. The big wave or the big mushroom cloud, probably your first indication.
Right.
But certainly, with mutual funds, one of the easiest ways to sort of dip your toe into it, as we were talking about this past week, is this notion of employer-sponsored retirement plans.
Yeah, that's a great way, to just gain a little bit of experience in the market. Most people are offered something like that through their employer. You contribute a little bit every paycheck, and I think the biggest thing is that fear, and what happens when you consistently invest in those accounts is you see the money gradually grow over time. You get a little bit comfortable with the swings of the market and the volatility, and it becomes less of an issue.
Well, and then from there, you toss in the potential of an employer match, right? A lot of employers these days will have a match, and then give you the option. And a lot of times, actually, you're almost automatically required to contribute now. There's a lot of automatic provisions that sort of push people into these, saving in these plans, which is great. These days, you can also do kind of a Roth basis as well. That didn't exist, a few years ago. Plus, the fundamental value of making those regular contributions. I mean, that's all about what dollar cost averaging is all about.
Right. It's a very powerful tool. The concept of dollar cost averaging being investing the same amount of money over time on the same date consistently, no matter what the market is doing. You buy more shares when the market's down, you buy less when the market's up, and you kind of smooth out the volatility, lower your cost basis. It's a great way to do it.
Yeah, great way to build wealth over time. But that being said, I mean, obviously, we can't ignore the fact that certainly the market can be pretty volatile at times, and but just to have that perspective that folks need to have. You think, we were talking about this. You think back to just what's gone on over the past 5 years.
Right. Yeah. No. I think about this sometimes, and it makes me laugh. If you had a crystal ball 5 years ago in 2020, and you knew everything that was on the horizon. You saw, okay, so we're going to have a global pandemic.
Yeah.
We're going to have inflation above 9%, wars in Ukraine and the Middle East, a trade war with China, all these things packed into half a decade, which is not that long in the grand scheme of things. Would you have been excited to invest, in the stock market? The answer is probably no. I wouldn't have been. But since then, the S&P 500 has doubled. It's gone up 100%. So your money also would have doubled, assuming investment in an index tracking fund like that. And that just goes to show that there really is never a great time to invest, is there?
No, and I guess it just when you think about that, the perspective of all of those events that have happened just in the past 5 years, I think that underscores that those headlines are always out there. You can go back in time, history of the market, and there's always something going on that serves as a distraction that helps to stoke the fear of that our investors have, which is what we're talking about today.
Absolutely. And another quote that I like a lot, this is from former Capital Group American Funds executive Graham Holloway. In my 25 years in the mutual fund business, I've never known a good time to invest. There are always a dozen reasons why it makes sense to wait. We have a new president, strife in the Middle East, excessive government regulation, and oppressive tax rates, and a Congress that is more part of the problem than part of the solution. That sounds, very similar to what a lot of people may say right now, but that quote's actually from 25 years ago.
Even longer. I think it goes back to 1981.
You're right.
Is when that quote was
much
from.
longer than 25 years ago.
So, I mean, when you think of that, there's, the beauty of that quote is, talking about, issues in the Middle East, issues in Washington, issues in this country, and it hasn't necessarily changed a whole lot.
No. There's never a time when it seems like the best time to get in, a perfect time to get in. It's you just, as time in the market is what matters, and the best time to start was yesterday. Second best time is today.
Well, that's a great way to say it. In our book, Next Gen Dollars and Cents actually has a pretty good chart that really helps to describe this pretty graphically, and so we're going to kind of work through that chart. But first, we're going to slide to a break. When we come back, we're going to talk a little bit more and give you some of the details on this very simple chart that we feature in our book, Next Gen Dollars and Cents, available on Amazon, or if you come to the office, courtesy of making an appointment through our website at nelsonfinancialplanning.com, and really kind of work through and help to really underscore why waiting is going to cost you much more emotional pain than whatever your fear of investing is today. Coming up next here on Dollars and Cents.